there's a lot of people hurting. And remember, everything is done at the margin. And at the margin, people are spending less. And therefore, there's a lot of businesses that are hanging on with their sales down 15 to 20%, and that essentially eliminates any profit margin. They're just hanging on for a few more months, in my opinion, trying to see if this economic recovery takes hold. But then if it doesn't, there's another leg down in the market that we're sure is coming, and then the economy slows down again. A lot of those businesses are going to throw in the towel and close down, which is going to cause another surge in layoffs.
When you talk, David, about how bad the consumer is doing as a whole, which is entirely accurate, and this new attitude that's been ushered in from this collapse where people want to be more conservative, more frugal, is this a permanent change in psychology in your mind, the way that it was, say, after the Depression?
I believe it's too early to say if it's permanent yet, but I think it will become permanent. I think there's been such impairment in consumer net worth, and then also from the credit side. The credit is simply not there. Credit card companies are dramatically cutting their lines of credit. The consumer credit numbers that came out yesterday were significantly lower than what people were expecting. People still have difficulty going out and borrowing like they could before, especially in the jumbo loan area. Most of the mortgage loans being made today are being made with government assistance. Paul Volcker recently said that the entire financial system is operating through the good graces of government intervention. Therefore, with massive stimulus, guarantees, purchases from the Federal Reserve, et cetera, this is what's keeping the credit system going, but it's still tight. There's still dramatic deleveraging going on. So the individual, I think, is caught. He saw how bad things were, in the October-March area. He's seen the market come up. With the market rallying some 50%, they're feeling more optimistic. They might be feeling their oats a little bit. They're going out and spending a little bit more money. They kind of want to go back to that. However, when they get hit in the teeth again with this next decline, then I think it's going to sink home. I don't think we're at depression levels, psychological levels yet, but we're going to get to that point again when these next series of declines occur.
What about this credit implosion, because you brought that up, that has happened in the U.S. and the subsequent collapse? How do you see that resolving over the long term, David?
Well, I believe that what's going to occur is that we've transferred, a lot of private debt to government debt. The government is standing behind various loans. The Federal Reserve is buying agency debt. They're buying mortgage-backed securities, et cetera. Unfortunately, what's going to occur is there will be a funding crisis, and it's only a matter of when and not if. The amount of debt that the U.S. government is taking on is extraordinary. The level of increase of government debt since October of 2008 is now $1.6 trillion. We haven't ever seen anything like this. The amount of debt going forward increase is expected to be in the $2 trillion range, for the next several years. Government is increasingly dependent on our foreign partners to continue to step up and buy this debt. And frankly, there's been a uproar that's growing louder and louder and louder against this. The UN came out this weekend and talked about the fact that we needed to move away from a dollar as the world's reserve currency. The G20 has talked about that in their backdoor meetings back in April. There's a significant meeting coming up in Pittsburgh in a week and a half or so that's going to be very important, keying in on this issue. We believe that that's where the problem is going to be. We are spending money like drunken sailors and will continue to spend money like drunken sailors until the money's taken away from us. And that money's going to be taken away from us through a funding crisis where there will be a treasury auction where people won't show up. There will be continued declines in the U.S. dollar. There could be a crash in the U.S. dollar that's coming. There's going to be higher interest rates. that's where we're going to go. And the money's going to be taken away from us as a drunken sailor, as a profligate country. And that's where we see this ending up.
The increasing scope of government involvement, taking over institutions, and now trying with healthcare, does that concern you, David, when you see that happening in a country?
It certainly does. And certainly the capitalist system has got to work. I mean, there's problems with the capitalist system, but as Karl Marx has said, essentially there's no system that's any better. I'm sorry, I'm not better with my words. It's early this morning. Obama's policies are moving away from capitalist principles. And this whole bailout, as an example, Chrysler, where secured creditors were given a backseat and they were ridiculed by Obama as he gave more of the company away to the unions. This is a travesty because essentially capitalist principles, bankruptcy law and secured lenders' position in line essentially was usurped by Obama coming in and feeling that the unions were entitled to a greater share. However, one thing that we need is we need to treat capital well, and we cannot go back and undermine promises that have been made through the rule of law. And essentially we're moving, at the margin in various areas away from capitalist free enterprise principles. And if anything, this is a time where we need to ensure that those principles are sacrosanct. If they're not, and we move away at the margin, away from free enterprise capitalist principles, that will hurt us relative to the rest of the world, relative to investment that needs to come in from the rest of the world. And unfortunately, we don't believe that the people in the Obama administration really understand that.
This is non-financial for a moment, but as we go through a cycle like this, David, and you see some of the moves that the government is making, do you worry that U.S. citizens are at risk of losing some of their freedoms or worse, that a police state could come about as a result of this collapse?
Yes, I do. And unfortunately, things are going to get very, very tough. And frankly, it scares me as far as where it's going. And government always acts like we're here to help you. And unfortunately, some freedoms will be taken from us. Some of those occurred under the Bush administration. I feel like they will accelerate in this administration. They need capital here. I mean, we continue to borrow money, and there will, in my opinion, almost for sure be capital controls down the road. There will be other freedoms that will be taken away, national ID cards, and we get to a point where there could be some civil unrest, which is not out of the question down the road, then more freedoms will be taken from us. And therefore, this is an extraordinary time, and 99.5% of the American people have no idea what's coming because they turn on CNBC or CNN every day and they see another pundit talking about everything's fine, and they hear Larry Kudlow talking about how everything's wonderful, and they just have no idea what might be coming.
How about the gold and silver markets? Let's move there for just a minute. All this talk about gold moving to $1,000 and silver starting to make its way up back towards the high teens. Where are we in those markets?
I think we're at very early stages, Eric. I mean, we essentially have fiat money in this country. We really have fiat money around the world. And gold is money. Gold is relied upon. This has happened before in terms of profligate governments always spend more than they have. They overpromise and they get into trouble, and then they tax, and then they can only tax to a certain degree, and then they print money. And therefore, people start to lose confidence in currency. And if you look at from 1998 until a week ago or so, even though the S&P is roughly flat, if you look at it in gold terms, which is real money terms, the market is down about 70%. So therefore, we've essentially debased the dollar over this period, and people are realizing that. And the debasement of the dollar is now accelerating with these $2 trillion budget deficits and then the increase in unfunded liabilities for healthcare. We're about ready to put another healthcare package on the table that's probably going to spend more of our money that we don't have. Foreigners around the world from the BRIC countries are talking, and the UN and the G20 are talking about the danger of the U.S. dollar and its profligate policies. And therefore, gold represents a bastion of stability. Through thousands of years, it has represented a store of value. And